Well, good afternoon. Welcome to the webinar on housing affordability in Nebraska. The webinar is being presented by the Bureau of Business Research, which is part of the College of Business Administration here at the University of Nebraska-Lincoln. My name is Eric Thompson. I'm the Director of the Bureau of Business Research and an Associate Professor of Economics here at UNL. We appreciate your participation in the webinar today, and we're going to be going through a relatively short PowerPoint describing how we're measuring housing affordability and telling you what we find in terms of affordability for Nebraska as a whole and for a number of metropolitan and micropolitan areas within the state. There's a few other features of the webinar I'd like to point out to you before we get started. To begin with, if you look to the right of your screen, in the middle, you can see there's a list of participants in the webinar, and and a chat window. So you have the option of chatting with some of the other participants in the webinar as it's going on, and I encourage you to do so. Also wanted to let you know, if you look at the chat window, that we have some information about how to register for our two upcoming webinars on the Nebraska Entrepreneurship Index in November and the Nebraska Economic Forecast in December. So please look into that as well. A few other things to point out. If you see the lower middle part of your screen, we have a question and answer window. So either during the webinar presentation or at the end of the webinar, you can type in a question and we will get those answered for you. And again, you can do that at any time. Lastly, I wanted to let you know that we're going to have two poll questions of the webinar participants during the webinar. So that's in the middle upper part of your screen. You can actually see the first question is already posted. What is the value of the Housing Affordability Index in Nebraska? Kind of hard to answer at this point, as you, at least in most cases, don't know what the Housing Affordability Index and how it's calculated and what the values mean. We're going to be talking about that in the first part of the PowerPoint presentation. I think that'll provide you an opportunity then to make your own estimate about what value you think the Nebraska's Housing Affordability Index will have. So with all that said, let's go ahead and get started on the PowerPoint presentation. That'll be the main part of the webinar today. So in terms of an outline for the PowerPoint, you can see that we're going to start by talking about the importance of affordable housing. And I'm not necessarily referring to affordable housing, low-income housing. That's housing which is affordable. We're tending to focus in this webinar for middle-income households. So how is that important both for our quality of life and our economy in the state? Then I'm going to provide a definition of housing affordability, how we calculate this Housing Affordability Index. Then once that's done, we can look at some of our statewide trends over the last year in housing affordability, as well as local trends in our state's metropolitan areas and a number of our micropolitan areas. So let's go ahead and get started with that. The importance of affordable housing. It's important for at least two reasons. The first is, of course, it's very critical to Nebraska households that we have housing in the state that people can afford given their income. And that's, of course, true whether you're looking at low income, middle income, and even high income households. Having quality, affordable housing really is a big contributor to the quality of life. Secondly, it's quite helpful for the economic competitiveness of our state's economy. If everything's equal in terms of job opportunities, amenities, and so forth, most households would prefer to live in the state with the more affordable housing. So having affordable housing in our state is critical in terms of attracting your skilled workers, your middle-income workers to the state, or retaining Nebraskans in the state who might consider moving elsewhere. If we have affordable housing, it helps us to do that. That's actually quite critical, retaining and attracting workers to our state's economic development. A lot of recent research has shown that we have a skills gap in the state, and in some cases a lack of skilled labor or just labor that our businesses need to expand and compete. So housing affordability is very critical as an economic competitiveness issue as well. Okay, let's start now in terms of the definition of housing affordability. And I'm actually going to give you a set of definitions that are sort of increasingly more specific. And again, we're focusing on housing affordability, not necessarily for low-income Nebraskans, not necessarily for high-income Nebraskans. We're focusing on housing affordability for middle-income Nebraskans in terms of what we're going to present today. So a general definition then of housing affordability would be, can the typical household afford housing in your state or in the cities and towns in your state? So is it affordable given the income that they have? Okay, so that's the general concept. Let's make it a little bit more specific. Can the median income household afford the median value house? So again, I indicated we're focused on middle income households. So can a little bit more specific definition is, can the median income household afford the median value house? Well, the median income household is the household that's right in the middle of our household income distribution. So you can imagine ranking up all Nebraska households from lowest income to highest income. The median household would be the household where exactly 50% of Nebraska households have a lower income and exactly 50% of Nebraska households have a higher income. It's right in the middle. That's your median. We could do a similar thing in terms of the median value of a house. What is the house where, if you ranked up all Nebraska houses in terms of value, the median one would be the one that has a value greater than the lower 50% and less than the top 50%. So we're talking about right in the middle of the income distribution. Can that median income household afford the median value house in our state? And I should mention, clearly, when we're talking about housing affordability today, we're focusing on home owners rather than renters. Okay, let's get now even a more precise definition of housing affordability. And this is the definition we're going to use in calculating our housing affordability index. So this precise definition, can a median income family afford to make a monthly mortgage payment on a median sale price house? So now we're defining the value of houses according to the median sale price of all the houses that were sold in a particular period of time. So can a median income family afford to make a monthly mortgage payment on a median sale price house with 25% of their income? If the answer is yes, then we say that housing is just affordable. Now, there's some more caveats or specific information to think about with this definition. First of all, when we talk about the monthly mortgage payment, we're just talking about the payment for the value of the house itself. We're excluding escrow. So we're excluding sometimes monthly mortgage payments, or frequently monthly mortgage payments include paying for your loan, your mortgage, but also paying for your property tax for the year, paying for a portion of your insurance. So we're excluding that escrow and just focusing on the payment for the house itself. And we're assuming a particular type of situation. So we're assuming that there was a 20% down payment. So there was a significant amount of the value of the house paid off down and therefore not part of the mortgage payment. What we would assume essentially is that the monthly mortgage payment was based on 80% of the sale price of the median home. And we're assuming a 30-year fixed mortgage. Okay, so with all those caveats, we're now able to define what we mean by housing affordability. And again, if the median income household can make that monthly mortgage payment for the median sale price house with 25% of your income or less, then we would say, yes, housing is affordable in that place, that state, that city, and that period of time. Also, I should mention that we should thank the Nebraska Realtors Association for providing the detailed information on median sale prices each month that we use to calculate these housing affordability indexes. Okay, so now we have this precise definition. We can actually come up with a mathematical definition for those of you who are interested in that. Obviously, I'll still explain how to interpret the housing affordability indexes in the next slide. Whether or not you follow along with this math, I'll tell you how to interpret it. But for those who are interested where the calculation comes from, here's just briefly a little bit more detail. The Housing Affordability Index is the ratio of median family income, which we get from the Bureau of Census, divided by a concept called qualifying income, and then multiplied by 100. So if the median family income was equal to the qualifying income, then the Housing Affordability Index would have a value of exactly 100, because it would mean that the median family income family could purchase the median sale price house with precisely 25% of their income. So more specifically, how is this concept of qualifying income calculated? Well, you think about the monthly mortgage payment you have to make, and you, again, excluding escrow, you multiply that number by 12, and that gives you kind of your annual mortgage payment, and you multiply it by 4. Remember, our idea here was the house could be paid for with 25% of the median family's income. Well, 25% is 1/4. So to get this qualifying income, you need to multiply that annual mortgage payment by 4, because that's the number that gives us whether the family can purchase to make the mortgage payment with 25% of their income. Okay, so that's how we define qualifying income, and then it's that ratio of median family income to qualifying income times 100 that determines our housing affordability index. So what's critical here? How high is the median family income? And how high is the qualifying income? Well, the qualifying income depends, of course, on how high the monthly mortgage payment is. This, of course, is a function of the median sale price. The higher the sale price, the higher the monthly mortgage payments. And it's also related to the effective interest rates that we pay. And, of course, we all know right now in the United States, interest rates are very low on home loans. Okay, but let's focus one last time on that definition. Housing Affordability Index is 100 times the median family income divided by qualifying income. If your median family income equals the qualifying income, the Housing Affordability Index is exactly equal to 100. If your median family income is high relative to the qualifying income, Housing Affordability Index would be greater than 100. So let me go ahead and, again, if you didn't follow all of the math, or you just like to have the rules of thumb for interpreting the Housing Affordability Index, here it is right now. If the median income equals the qualifying income, we say that housing is just affordable, because that median income family could buy the housing with exactly 25% of their income. Then we'd say the Housing Affordability Index is 100. If the median income is greater than the qualifying income, then we'd say housing is more affordable. You can make that housing purchase with less than 25% of your income. And Housing Affordability Index is greater than 100. If the median income is less than the qualifying income, then housing is less affordable. You would need more than 25% of your income as the median income household to pay for that house. And the Housing Affordability Index would be less than 100. So it makes sense, right? More affordable, the higher the value of the Housing Affordability Index. So is Nebraska going to be right around 100? Is it going to be above 100? Is it going to be below 100? Now is the time to make your estimate. Given this definition you've seen, is the Housing Affordability Index in Nebraska right around 100, just affordable, 150, more affordable, or above 150, extremely affordable, with gradations, whether it's 200 or 250? That's what we want to see. Is the index more than 100 here in Nebraska? And if it's more than 100, how much higher? So I'll make sure everyone's had a chance to vote here. It's kind of evening out. We're thinking right around 100. A little bit more people thinking 150. Let's go ahead and reveal the results. This graph shows the Housing Affordability Index value in Nebraska and the United States over the last 13 months, from August 2015 to August 2016. I have two lines here. The blue line, it's a little hard to read read the key there, but the blue line is the Housing Affordability Index for the United States. The red line is the Housing Affordability Index for Nebraska. And you can see that nationally, the Housing Affordability Index is right around a little bit above 150 over the last 3 years, last year. So that would mean that housing is actually affordable in the United States right now for the median income household. Actually, and not just affordable, comfortably affordable, with the index value at 150, a full 50 points more than 100, where index value of 100 would signify just affordable. Why is this the case? It's likely related to the fact that we have pretty low interest rates right now on home mortgages. That keeps those monthly payments lower, which keeps qualifying income lower, and then the housing affordability for the median income household is pretty solid. So affordability is decent right now in the United States, at least for a median income household. We might get very different results, of course, if we were focused on low income households. And then look at Nebraska. We're much higher still, right around 250 over the last year. So housing is very affordable for the median income household here in Nebraska, and much more affordable than it is nationwide. So the group should have, the participants might have been a little more optimistic than they were in terms of their expectations. Now remember, this definition excludes escrow. So for many of you, when you were thinking about this and thinking about monthly mortgage payments of people you know or yourself, you might have been calculating in that escrow as well. That may explain some of the reason for the difference. And here's just specific values. If I took an average over that 13-month period, Nebraska was a little shy, 243, a little shy of 250, and the U.S. was 165. But again, housing nationwide, quite affordable right now. Housing in Nebraska, very affordable during this period. In fact, a value of 243 means that the median family can afford the monthly mortgage payment, excluding escrow, and I know that's significant, excluding escrow on a median family house, medium-priced family house, with approximately 10% of their income. So that's good for our standard of living, means money is available for use for other purposes. Furniture, it could be other purposes related to housing, furniture, repairs, etc., but not for that purchase. Now, where will housing, so that's the situation statewide in Nebraska. We know that the price of housing varies in different parts of our state. So that gets us to our next participant question. Where will housing affordability be greatest within Nebraska? Again, we're grateful to Nebraska Realtors Association for providing us information on housing median sale prices within the state, allowing us to calculate housing affordability indexes not just statewide, but in different regions of the state. And we wanted to focus on some of the mid-sized cities in Nebraska, metropolitan and micropolitan areas. So we had data from Grand Island, North Platte, Norfolk, and I guess our question is, where do you believe that housing affordability will be greatest? Because the Housing Affordability Index has the highest value. That's our next question. So I'll go ahead and let people vote. And before I do that, let me just make one more statement. One more statement about housing affordability statewide throughout Nebraska. We know that housing values have been the housing values, the sale price of homes has been rising over the last year. The median sale price has increased over the last year. but it's actually still true that the Housing Affordability Index rose slightly in Nebraska between August 2015 and August 2016. Just slightly. It ticked up about a point out of 250. But it did tick up. And the reason for that is we've had rising median household incomes over the last year, actually rising pretty solidly over the last year. And there's been a slight decrease in interest rates even over the last year. And this is compensated for the fact that the median sale prices have been rising. So an affordability index really tells you a lot of things about what's going on in the economy, not just whether houses are expensive or not, but also whether incomes are growing and what the story is with interest rates. Okay, let's go ahead and get the results. So I see about half of people had Grand Island, and about almost 3/5, and then around a third had Norfolk, and about a sixth had North Platte. So let's see what we find in terms of our housing affordability indexes. This is for 3 recent months, June through August of 2016. You can see we've got the Omaha area in there. We've got data for the Midlands area, which includes Lincoln and some surrounding areas. We've got Grand Island metropolitan area. We've got data for that. Those are our metropolitan areas. And then we have some of the micropolitan areas in the state, such as Hastings, Lincoln County, which means North Platte, Norfolk, and Scottsbluff County. So let's look at some of our findings. First of all, to answer the question, where will housing affordability be greatest? Well, at least during this period, housing affordability was greatest in the Norfolk area. So we had a housing affordability index of 308, which was greater than the housing affordability index of 257 in Grand Island, and also slightly higher than the 295 value in Lincoln County. So, although I will admit that Lincoln County and Norfolk are pretty close. So, Lincoln County, North Platte. So both of those were close to true. And housing itself might be a little bit more expensive in Grand Island, and incomes in Grand Island at the median household income tends to be a little bit lower. I think that's the reason for the difference. Now we've answered the poll question, if we could speak a little more generally about the results. If you remember that state average, 243, now that was for the last 13 months. Now we're looking at data for just the last 3 months. But as you saw earlier, the housing affordability index values have been pretty stable over the last 13 months. But you can see the metropolitan areas are kind of near that state average. Grand Island, affordability is a little greater than the state average. Omaha is right on the state average. The Midlands, which is the Lincoln area, is a little bit below the state average. But housing affordability is very high in all 3 of these areas. But housing affordability is extremely high in many of the micropolitan areas in our state. Scottsbluff, it's higher than in those metropolitan areas. Lincoln County, which means North Platte, almost around 300. Norfolk, 308. Hastings is all the way up to 400. So this is a big advantage some of our micropolitan areas have, that housing is so affordable. Even compared to Lincoln's metropolitan areas, where housing is already very affordable compared to the United States. Now, I wouldn't want to just leave it there, because we know that the housing situation is not ideal in our state's micropolitan areas. Housing is very affordable. However, especially in our micropolitan areas, we do have issues sometimes with housing availability. In other words, there is housing available, but is there a variety of types of housing available, so that the type of housing that different people want, when you're talking about middle-income households, is available. Some middle-income households will be willing to pay a little bit more for new housing. Some will want to pay a little bit less for older housing, or pay the same but just get a larger, older home. But it is important to have that mix, including options for new housing. And many of our micropolitan areas, while housing is quite affordable, may have issues with housing availability. Not enough new housing, not enough housing of the type that perhaps younger median income families are looking for. So housing availability is an issue. It's not all a rosy scenario of high affordability. And of course, why is that occurring? Well, limited population growth and the fact that many of the existing homes have moderate to low sale prices has discouraged builders from coming in and putting up a lot of brand new spec housing, at least. And a lot of the new housing that's built tends to be custom built. And then, of course, in that case, you lose some of your cost advantage because custom homes tend to be a little bit more expensive. Okay, well, those are the main points we wanted to make today about housing affordability. I look forward to answering some of your questions. And it's not too late to keep asking questions. First, how do we reconcile these results on affordability in micropolitan areas and what we hear about severe shortages? Okay, good question, and I think my best answer there was what I finished with. I think that the issue is there isn't availability of the types of housing that people are looking for, and also market conditions make it even more likely that the new housing is not available. In particular, if these micropolitan areas and rural areas have low-priced existing housing, that existing housing in some ways is going to be the competition for any new housing that builders decided to put up. And when you have the lower prices for existing housing, that can tend to discourage the builders from building new housing. And so I don't think the two things, they're unfortunate, but I think they can be reconciled. And I certainly don't want to say that the housing situation is great in rural and micropolitan Nebraska because of that shortage issue, because of the availability issue. However, it's not all bad news either, because at least affordability is high for people who can find a house or find the type of house they're looking for. Would the minimum wage, second question, increase play a factor in changing the housing affordability index? This particular index that we're talking about today, where we focused on the median income family and the median value house or median sale price house, probably would be relatively unaffected by the median wage increase. Typically, median wage increases affect lower wage workers, whether they're literally people at the minimum wage or people making somewhat above the minimum wage. In a median income household, it's likely that at least one of the wage earners would be earning well above the minimum wage, although you could have several wage owners in a median income household, some of who do work at the minimum wage or near the minimum wage. But I think in terms of buying power, the median income household, the minimum wage would have a modest effect. The share, I guess the other issue would be the sale price values or the cost of housing. Again, relatively few of the people that work in the housing construction, in the housing sales industry, title insurance companies, all the different businesses in the housing industry, relatively few of those people work at or very near the minimum wage, so I'm not sure how it would affect costs as well. Next question. Why does the free market not balance out affordability and availability in outstate Nebraska? That is a key issue. It may be in part this idea of the competition between the existing homes and potential new homes that could be built. In other words, if the median sale price in an outstate area or any area where this is the case, if the median sale price is very low, that in a sense creates competition for someone thinking about building new housing. Obviously there's a lot of people that are interested in new housing. However, if the price differential between new housing and existing housing is large enough, even those people might say, well, I'd love a new house, but gee, given these price differences, I might want to go with an existing home because of the savings. So it may in part be a free market outcome, but I share the perspective also of the questioner in the sense that why haven't companies sprung up that are focused on addressing this situation, who have found a way to make money even in the competitive conditions I was describing. It may be somehow related to regulation or things that we've done to make construction more expensive. It may be that the financing, when you're talking about a new housing development in outstate Nebraska, financing is somehow more challenging. There have been a lot of new regulations on the financial services industry, so there could be other factors in play as well. Do you have any data on the percentage of medium income families who actually have 20% down payment? No, I do not. I think that's a good question. I think the housing affordability indexes have been around for a long time. Because of consistency over time, the definition tends to follow kind of the classical definition of a mortgage, where historically a 20% down payment was much more common than it is now. I would think a portion of median income families would have a 20% down payment, but it would probably be less than half. Now, if we didn't use 20%, if we assume 10% or 5%, that would reduce affordability. However, it wouldn't really change the relative affordability that we've seen in this webinar, that affordability is much greater in Nebraska than it is nationally, because there isn't a large gap in median income between Nebraska and nationally. And similarly, affordability would be greater in our micropolitan and rural areas. Another question we received is, what is the distribution of middle income wage earners? The middle income wage earner is typically, as I recall, around $20 an hour. In terms of the median household income, that tends to be, depending on the part of the state, between $55,000 to $70,000. Again, not per one wage earner. Most households have multiple wage earners. Well, I'm not seeing any additional questions. Thank you. That was a good group of questions. I want to thank everyone for participating again today. If you have an interest, if you didn't see your community there in terms of a housing affordability index, if you had an interest of having an index for your community and could provide us with some median sale price data, don't hesitate to contact us. This is a service we'd like to provide for as many areas of the state as we can. I'd also want to invite you in particular to our next webinar on November 18th on entrepreneurship in Nebraska, and then we'll also have the economic forecast webinar coming up in December. Here's all the ways to contact us. Follow us on social media. Again, thank you for your time, and we'll be sure that this presentation is available to you. I see there's some discussion in the chat room going on about that now, but it will be available for you. So thank you again for participating in our webinar today.